Okay, so finally we're at the results. We've got option 1 and 2 here. Option 1 is with no effort to deduct our expenses and using sole proprietor taxation. Option 2 is with effort to deduct expenses and with sole proprietorship taxation. Option 3 is effort to deduct expenses with S Corp tax election. Our federal tax here, $3,467 under option 1, moves down to $1,172 for option 2, and hovers about the same at $1,197 for option 3. State tax for option 1, $1,229. Option 2, $464, hovers around the same for option 3 at $472, slightly higher there. Social Security and Medicare, we went from $66.83 to $45.19 down to $1,058. Now you see actually that $1,058 is listed twice here, and that's because the business is going to pay half. So actually our Social Security and Medicare costs us about $2,100. The business pays half of it. And if you remember earlier in our cash flow, that number was listed right up here. Okay, so let's look at the summation of each one of these scenarios. Option 1, $11,379 per year in taxes. Option 2, $6,100, that's around half. Option 3, $3,785. So you see the difference here between option 2 and 3 is about $2,300, and that's 38.5% tax savings. Now let's go down to the adjusted gross income. Of course, it was high for option 1 and much lower for option 2 and 3, but hovering about the same. Finally, we have the net income to owner or the business if you wanted to expand it and buy more assets. We went from $23,500 to $30,200 to $31,600 for option 3. Now, this is a difference between option 2 and option 3 of $1,380. Now, you may say, well, we saved $2,370. Why are we only netting an additional $1,380? And if you remember, that's because we had to add some extra expenses up top here for things like unemployment compensation, accountants, and QuickBooks due to the fact that we're using S Corp taxation. So let's take a look at this chart here to kind of give us a sense of the big picture. In this scenario, given these AGIs and also at the time that this video was made, we have a potentially quite a bit lower student loan payment for option 2 and 3 due to the fact that we have a low AGI. And that's, of course, assuming that you have student loans to begin with and that you're on an income-based repayment program. And also, given that lower AGI, we would also have potentially lower health insurance costs under the Affordable Care Act. And that's at the time this video was made and given this certain AGI here. Personal liability protection would definitely apply to option 3 because we have no choice here. We have to be either an S Corp or an LLC electing to be taxed as an S Corp. Under option 1 and 2, that would depend on whether or not we actually formed an LLC or not. The lowest tax cost we just went over, option 3 wins that. Unemployment benefits. Option 3 is the only one of these 3 options that has that. Option 3 has a built-in access to accountant. We had already put it in our budget. It's not that we couldn't hire an accountant for option 1 or 2, but we just didn't put that cost in those cash flows. And here's something we haven't talked about, increasing tax savings as the business grows. And that's the real advantage to option 3 here. The more successful we become, the more taxes we start to save at an increasing rate. So I'm going to show you an exaggerated example here so you can see what I'm talking about. I'm going to go all the way up top here and change our salary to about $51,000 a year. Okay, let's say here that we found a way to make an additional $100,000. Let's go all the way back to option 3 and now look at what the results were. The tax savings between option 2 and 3 is $9,100, so that was a 24% savings in taxes. Let's say we made $200,000 instead of $100,000. Let's go back to option 3. Now that's $22,000 in tax savings. That's now over 30%. We would have assumed that doubling the income like that would have just simply doubled the tax savings, but it went higher than that, up to $22,000. So once again, the real advantage of option 3 is that the more successful we become, the more tax we start to save. So I'll say one last thing about option 3 taxation. This is the option that master entrepreneurs choose. And if you want to become a master entrepreneur, you have to start acting like a master entrepreneur.